Welcome everybody to another eye opener. These are Market Wealth Dailies, quick little video chats we do with top traders. We got Blane Markham here, and Blane is part of the Chuck Hughes trading team, and really excited to have you back. The consistent meetings on these have been awesome, man. It's really been great to kind of see how things play out, follow up on stuff we talked about recently, and just kind of a realistic view for traders who are trying to figure out how you adapt, how you bob and weave. And, we go from this crazy down market to a crazy up market now into a range. I mean, we're seeing cycles that usually play out over a year or more happening within the last couple months. So this is like, learning by fire if you're trying to trade in this market. Just grateful to have you with us and help give us a little bit of guidance on it, Blane.
Yeah, absolutely. Well, thanks for just first off, just thanks for having me here, John. Always love to be here. So appreciate your time and thanks for having me. But to speak to what you're talking about, yeah, it absolutely seems like just respective to the markets, nothing really happens slowly anymore. Anytime we have these massive moves, they don't seemingly wait and try to play out over 4 or 5 months or even a year. They just get all the selling or buying out of the way in a couple weeks' time. So you get these just crazy, just sharp sell-offs and then V recoveries. We've seen a lot of these really over the past 5 years. So it kind of happens at breakneck speed, but trying to keep up with it.
Yeah. Yeah, it's a lot to process, and what I think, be optimistic about it, right? Look at it. If you can trade in this kind of rapid fire environment, it really sets you up to be able to trade in other environments as well, where things are a little bit more protracted and spread out. So, it's a good reminder not for people to not get discouraged, to kind of keep the faith and know that we're all facing the same battle. So this is crazy for everybody. It's not just for any one person.
Yep, 100%. No, always like to keep the good, the optimism up and high and flowing here with the team. Always got to keep a nice positive approach to the markets and yeah, you just keep at it, keep chipping away. That's always the key. So, but
Awesome.
with that, John, I can go ahead and hop in just a couple of things I want to talk about today. As you mentioned, kind of as we touched on Monday when I was here visiting with you, just looking from the top down, index level, speaking about stocks. We are still largely range bound. I talked pretty much in depth on Monday about how I expected us to, absent some massive catalyst, either the upside or downside, to remain largely range bound after the large move we've had off the early April lows. We've added just about 24% to the S&P index since that early April 7th intraday low. So, that's a good year's worth of performance for the S&P that's happened in all just about a month and a half. So, understandably, it's, the market's due to take a breath and, have a bit of a sideways range bound consolidation period. And I truly think that's what we're probably going to be in for again, absent, some massive catalyst either the upside or downside. We could see that come in the form of, a major economic data miss or, could be a positive trade deal, something like that, something along those lines could obviously kind of throw all this analysis out the window. But just at status quo, that's kind of what we're seeing. And, thus far through this week, we've largely remained in that range that I was defining on Monday. It's right now the range we're trading between is on the lower end, the floor is roughly the 200-day moving average. And on the higher end, it's still roughly right around that 59. I called it roughly 59.50 on Monday. We closed just a couple points, about 15 S&P points above that yesterday, and we're really not high off of that range now. I mean, we've intraday today kind of gone up and flirted with the 6,000 level. We haven't crossed above it. We certainly haven't closed above that 59.50 way, in any significant, meaningful way. I mean, we were again a touch above it yesterday. So, just keep in mind this, the current ceiling on things is somewhere, it's again, I said roughly 59.50 on Monday, but it's between 59.50 and 6,000. So it's somewhere in that range is kind of where stocks are currently finding resistance. And we've seen that play out. You can see here a couple weeks back, just a touch above 59.50. That's where stocks kind of found a ceiling before going down and retesting the 200-day moving average. And we're right back in that range now. So that's kind of the current lid on things, absent a positive catalyst to move higher from here. But with all that said, certainly the technicals are still looking very nice, John. We've made a great series of higher highs and higher lows, shorter term higher highs over the past couple months. We've broken out above a number of significant technical resistance levels that have now flipped to support levels, and we're still remaining meaningfully above many of those. So overall, still a very strong setup for the S&P. And one other final thing, just to kind of touch on briefly, just a further point of why the technicals look really strong for the S&P right now. I'm actually going to flip to another charting platform here because I think they do a really nice job at actually charting this. And so this is still a chart of the S&P 500 here. So that's the top chart we're looking at right here. But I'm actually going to focus in on this lower study down here. This is just the advanced decline line specifically for the S&P 500 issues, or just the stocks that make up the S&P 500 index. So this is looking just simply at the advanced decline line, just of those stock prices on any given day. And you can see over the past couple months, we've had a nice ramp, acceleration in this line. It was making, a series of new higher highs and higher lows throughout late April and through mid-May roughly. Had a bit of a pullback when we went down and retested the 200-day, but now we've resumed that upward trend. So that's meaning that there's very good breadth to this rally. We're still trying to recapture, about 50% of the S&P 500 names trading above their 200-day moving average. We're right on the verge of doing that. We may have actually crossed that this morning. I haven't had a chance to check yet, but we were within a percentage point of doing that in the last couple of days. So, if we can get above 50% of S&P 500 stocks, each trading above their 200-day moving average, that's another great sign of pretty broad breadth for this rally, meaning that it likely has even more staying power. So between that and also seeing what we're seeing in this advanced decline right here, seeing this line beginning to take another arc higher, another leg higher, as stocks are beginning to rally and trade off of that 200-day moving average test. That's another really nice sign for just stocks broadly, talking about index level, just broadly speaking for stocks. Of course, there's different individual stories mixed in there, some good, some bad. But with that, because of all this, we still do have a nice bullish tilt to how we're looking to approach the markets, John.
Mm-hmm. Yeah, no, really great to see this data. Great to get perspective on it. And I was just talking with Keith Harwood about the fact that indexes are an aggregate. So there are a lot of pieces within that number. And it's designed as a tool to kind of give you a broad sense of what the market's doing. But there's a lot of movement going on within that, that create that S&P number. There's individual stocks in there that could be, not performing the same as the index, and it's averaging them out. And what this tool does is help give you a sense. It's all right. What's within that number? How many are really advancing? How many are really being positive? And as you said, more and more starting to get above their 200-day. It's showing just really good strength behind the momentum going up. And that's just such an important thing. You can look at any of this stuff and I use the analogy of idiot lights, the old lights on the dashboard that used to come on. You didn't have a gauge, you just had a light that said something was wrong. And you can't rely on that. As a trader, you need the gauges. You need to be able to see multiple data points to be able to define a trend. You can't just see one thing that says it's this or it's that. And these are the kind of tools that folks need to be able to kind of get that sense, make those decisions, be able to dig through and find the great trades, especially in a range bound market like we're in right now. When you get into this, that's where it becomes more important because everything isn't moving up. Things are moving in different directions. You can see that. That's what causes this gridlock. And you're looking for that really solid trending stock up or down. There's a lot of ways you can trade it to find a great trade. So tools like this are invaluable, Blane.
Absolutely. No, and that's exactly why we look to, we have all these different tools that we use to, kind of simultaneously together evaluate stocks and conditions, market conditions, see what is the best opportunity and, best idea, different trading ideas out there. So, it's it's absolutely very important to stay on top of all these things, as you said, using all these various different technical gauges. But As I said, with all that in mind, John, because of the technical analysis we're currently doing on the markets, what the charts are telling us, what the data is telling us, we still want to have a bullish tilt to our trades, but expecting that we're likely going to be in somewhat of a consolidating, kind of sideways, maybe a slightly choppy market. Just remaining range bound here, perhaps for the next few weeks or months, even as before we anticipate the markets are going to break out to new highs throughout the summer. With that in mind, we still want to have some bullish opportunities out there, some bullish trades to try and capture some opportunity in the market, but possibly even have some downside built in, so not fully relying on a directional move of the underlying equities or stocks. So the next trade idea I'm actually going to talk about here is going to be capitalizing on a move that happened in the after hours last night and so far through today on the back of a company's earnings. So the company's going to be CrowdStrike here, John. This is probably the preeminent player in the cybersecurity space. This is probably the top company in that space. And they actually reported earnings last night, and despite what you can see on the chart here, seeing the stocks down about 4.5% on the day, it was actually a very good earnings report. It wasn't great. The stock had rallied quite a bit into the earnings report, so there were some, obviously just through the roof expectations for that report, and they delivered nice. They had a great earnings beat in line with revenue, but the guidance was a little softer than what some people had hoped in their best case scenario. So the stock just got knocked down just a bit, but I mean, you can see the chart still looks incredibly strong. It's been making a nice series of higher highs and higher lows despite today's trade down. The stock still has not even made a new shorter term lower low, so the chart still looks great. It basically traded down to our middle Keltner channel right here. So the technical still look very strong here for CrowdStrike. This has been a stock we've been trying to get in on, for a number of different occasions over the past couple months, because, in the recent sell-off that we saw in late February and early April, the stock relative to the market held up quite well. It still sold off, but relative to the index level was still, outperforming the index. It declined less, and then it recovered very quickly as well and broke out. While the index is not broken out to new 52-week highs yet, as you can see, CrowdStrike has set numerous new 52-week highs once it regained steam and started trading higher. So, the technicals still look really great for this trade here. Again, we have another technical buy signal here. We have our 21-day EMA trading above our slightly longer term 63-day EMA right there. You can see that buy signal actually generated roughly mid to late April. You can see the crossover right there, the bullish convergence. So great looking buy signal here to go ahead and take advantage of this post earnings move where, CrowdStrike shares have come in a little bit. They've pulled back a little bit. They're not quite as nosebleed overbought as they were at the close yesterday. You can see they were quite overbought as of market close yesterday, trading almost all the way up to 490, pretty well above the upper channel. But at today's prices, you can see the stock has pulled back, come in a little bit, offering a more attractive entry point. And just one quick thing before I go ahead and hop into the trade. This is a similar chart to one of the ones I looked at on Monday. And this is one of my favorite things to look at regarding technicals, and even in any market really, but specifically a consolidating market when momentum is somewhat slowing market wide, indexes are slowing down, the indexes aren't printing new 52-week highs or new higher highs day after day. I like to really look at these ratio charts, because what they show you is, if you compare it to the S&P 500, what this chart is, this is CrowdStrike's price divided by the S&P 500 price. So our numerator here in this ratio is CrowdStrike. The denominator is going to be the S&P 500. And how you read these charts, the numbers over here are not what's important. It's really just the trend line and the direction of the chart here. And so when you can see that you have a line that's sloping up, what that means is that your numerator is outperforming compared to your denominator. So in this case, since our line has been sloping up, really you can see ever since August of last year, there's been a couple different points here where it's pulled back, but overall have a very nice up and to the right trend here in this ratio chart. And so that what that's indicating is that over this period of time, CrowdStrike has been significantly outperforming the S&P 500 index. And you can see, especially of late, coming out of early March, even through early April, the CrowdStrike shares have been significantly outperforming the S&P 500 index. So what that means is that CrowdStrike's share price has great strength relative to the S&P 500. So that means that it's much stronger, has much more momentum behind it than just compared to the S&P 500. So particularly in these consolidating markets where the momentum at the index level is falling off, we want to target these stocks that still have very strong momentum compared to stocks broadly. So with that, John, that's why between just CrowdStrike's chart and some of the technical showing up there, still seeing CrowdStrike's very strong relative momentum over the past couple months here, seeing that it still has great momentum and outperforming the index. That's why this is a stock, particularly at today's prices, is one that we're definitely going to be looking to take advantage of. So I went ahead and found actually a trade here. And as I mentioned earlier, given that we're seeing momentum broadly slow down in the markets, even though CrowdStrike is still a relative outperformer compared to the index, we still would probably go ahead and look for a non-directional trade. So probably something like one of our call option debit spreads. You certainly could go ahead and still take a directional trade on this, and it would certainly make sense given all the technicals that is laid out. But as you can see here, some of these option premiums, this is just looking out not to June, but out to the July 18th monthly options. You can see right here, this is the 460. This is the at the money strike call right here. It has almost $30 of premium. So those are insanely rich option premiums. So when I see that, and when a trader's brain sees that, you see, oh, there's some opportunity there to use a strategy that can benefit from that extra option premium. So what I'm actually looking at right here is setting up a call option debit spread to take advantage of all that extra option premium, because the higher, while that can, just for a directional trade, that just leads to a higher entry cost and you have to pay more to put that position on and taking a lot more time value risk. But with a call option debit spread, that's actually beneficial to those trades, right? Because that's just going to lead to an increased profit potential for your trade. So I actually found this call spread example right here using the July 18th, 430 and 440 strike calls. You can see at current prices, it's this is a 10-point spread, and it's coming in just about 6.43. That's current prices. So it's actually a little bit lower than when I looked at it just before hopping on. But so I took that current trade data. So there's your stock symbol and the current price, and then those two call strikes there and their premium, and just put it into our calculator here just to see what the profit potential and downside protection analysis were. And so you can see that at this price, so if you were to able to enter this trade at an entry cost of 7.12 points for the spread, it would actually give you a 40.4% profit potential. So this is a bullish trade. It still has a bullish tilt in the direction of the trade. So if CrowdStrike shares were to increase at all by the option expiration at July 18th, you can see this trade would be set up to make a 40.4% return, taking advantage of that very increased time value still in those options. You can see even if CrowdStrike shares were to remain flat, still producing that full profit potential of 40.4%. And then even if the stock were to sell off from here further 5.5% by option expiration, you can see still this call option spread would still be in the money because we sold, with the spread, we'd be looking to sell the 440 strike call. So it'd still be set up to realize its full profit potential of 40.4%. So that's John right there. That's, something I spotted just this morning, an opportunity we can really take advantage of that post earnings move in CrowdStrike and take advantage of those really rich premiums that are still out there.
Wow, just amazing to be able to confirm this kind of range bound market and then turn that into an advantage, turn that into the kind of backdrop that makes trades like this just really make a lot of sense. Great to be able to share that with everybody and have them see how they can kind of work their way to it. It's a really useful tip for everyone, Blaine. That's awesome, man. Had to be pretty excited when you saw that pop up, right?
Absolutely. Yeah. No, as a full disclosure, as a CrowdStrike shareholder, I was for my shareholding, I was a little, I was like, oh man, I wish they were up 5%. But for looking for new opportunities, I was like, oh man, that looks like a really ripe setup for an options trade. So
Yeah.
wasn't down in the dumpster too long. I got excited when I saw that opportunity.
Yeah, and back to what we said earlier. So this market is just moving at a breakneck speed, and we're seeing all these cycles play out so quick. This is just another great example. You have to have a toolbox that will allow you to pounce on whatever the current market is. Truth be told, in previous markets over the last couple of years, you have a little bit bigger of a window to do this. You're not scrambling quite as quick to react. But man, if you walk into a market like this with this, the opportunities just seem to pop up. They bubble to the top. And this is a great example of that. If you know what tool to apply to what type of market. That's what, I just love that about the training and the education that you guys do because you're putting these tools in people's hands on a regular basis. And we talked about it Monday. I had a huge response. Everybody was asking about the weekly profit opportunities. I think it's appealing because it's consumable, it's really accessible. This is the newsletter that you do. You send out a little video, I believe it is, on Sundays, and kind of give people a heads up on a great opportunity each week, and they can just jump in and take advantage of it. The cool thing is you have been part of the Hughes team, and Chuck's just organized this great collection of tools. I'm a big woodworker. I love walking into an organized shop and I just start drooling when I see, oh, wow, look at not only do they have all these great tools, but they're right in a place where you need them and you can grab them. It's the exact same thing with trading. So, if Chuck's trading workshop, as it were, was a physical thing with all the tools physically on the wall, I would be in heaven walking in there because it's all organized, it's all there. You have what you need. You can just reach up and grab it and put it in place. And you're getting the guidance of somebody who's a journeyman, who has used these tools over and over and used them incredibly well. You can see their artistry, that what he's done with the markets. It's phenomenal. So, and I almost fell off my chair when we were talking about it Monday that the weekly profit opportunities, you can get into that for $1 and take a look at it and see how it goes accessible. Chuck has made it his legacy to make these tools accessible to everybody, and that's what that is. All of this just kind of just weaves together into this great little thing. So you take that opportunity to get involved in that. You see a great example of what you're putting out there for folks. How excited you get when you uncover these really good opportunities. That passion carries through in all this stuff. So just great seeing all this come together in today's chat here. Grateful for that, Blaine. Thanks for sharing that with us.
Yeah, absolutely. Of course. I love getting able to, go out and hunt out these opportunities out there and be able to bring them here live and share them with you all watching live at home. So I really enjoy it. And, I have a, passion in this line of work very similar to Chuck. I've personally myself love trading, being engaged in the markets, following this stuff day after day, minute by minute, but also love being here to try and help educate those out there that have a bit of a do-it-yourself approach. They'll want to go out and attempt trying to trade in the options market yourself, and try and just teach you some of the basics of technical analysis and some of these tools that have really helped us over the years and has helped Chuck for 30 or really close to 40 years now in his trading career. So being able to bring these tools, articulate them to you, show you how we use them, and hopefully you find them useful yourself.
Yeah, now this is great, and we're gonna drag you back next week again. We'll get an update on the site for when the next session is, and we'll follow up. We'll see how this plays out, and being able to kind of come back after we've seen the setup, we saw how you found it, kind of walk through kind of with the pieces where you were that helped you discover it, and then we'll see kind of what happens over the next week or so, and check out how this trade sets up and what the potential really is. I'm excited about it. I think this one's definitely a no-brainer for me. So thanks for taking the time to meet up with us today, Blaine, and talk through this with everybody.
Yeah, absolutely. So glad to be here. Thanks again for having me, John. I love getting to attend these eye openers and hop on here live with you. So thanks so much, folks. I hope you enjoyed what I had to share with you today, and hope you all have a fantastic week. And I'll look forward to seeing you back here on Monday.
All right. Take care.
See you, John.